Hello. In this video I will explain how to work with a trading diary, and I will show an example of a Google Sheet diary that you will be able to use because I will post a link, so you will be able to copy and make it yours if you want. So I will try to explain as better as I could. First of all, you will see that we have four sheets here. Those sheets will be base sheets, so you don't have to modify anything on that sheets, because these will be information that you will pick up, copy, and paste to other sheets. I will use examples to explain how it works. First of all, let's imagine that we used to work in two different exchanges. One exchange can be, for example, BitMEX, which is BTC based. It means that the currency of your portfolio is based on BTC, and you can work, for example, in Bitfinex, Kraken, or whatever, where your base currency is USD. If you use Kraken or anything like this, you will use that sheets. Okay, so for example, we will create one sheet for every exchange we have. Okay, in that case, let's imagine that we have one account in BitMEX. What we will do is to copy this, duplicate, move it to the right, rename, let's say BitMEX. Okay, when we have this here, we will take all this information and we will delete. Okay, so now we only need this information in that sheet. So let's do the same with a USD currency based exchange. We go here, we duplicate, we move, rename, and let's put here Bitfinex. We go here and delete this. Okay, so for us at this moment, this is the sheet that we will use for every exchange for our diary. So first of all, let's understand what we have here above. Sorry, before this, you will see that in the basic sheets, you have a code for every cell. So the only thing that you have to know is that the orange cells are the ones that you will have to fill manually. The gray cells are the ones that are automatically calculated, so you don't have to touch them. And the green cells and the red cells are also automatically calculated, but are green because are profit and red because are loss. Okay, so basically you only have to work on the orange ones. So to explain how it works, I will begin working with examples. So let's go to the BitMEX sheet and we will begin here. Let's imagine that our BitMEX account initially is from 1 Bitcoin. Okay, we put 1 Bitcoin and we here put the value of Bitcoin at the day that we have opened the account. Let's imagine that is today. At that moment in the charts, BitMEX is at 806. And today is 27/9/2099. Okay. The actual account, this is the real value of your account once you begin to create trades. So at this moment is 1. But imagine that you begin to trade and win money. So you will put here, imagine that 1.1. So this is the calculation of your profit in Bitcoins, in percentage, and then in dollars. So you will see that depending on the price of Bitcoin, you can be in a win position against Bitcoin, but in a loss position against USD, for example. Imagine that you bought Bitcoin at 9K. So now you will be in a loss even if you have 1.1 Bitcoin. Okay? This is automatic. This is a price on dollars. And this is a formula from Google Finance where you feed the price of Bitcoin more or less every 30 minutes or something like this. Okay, so you will have some difference from this price and from the real exchange, but it's not important because this is more like to have a guide, a mental guide for you. Okay, this will be, as explained, the sheet to be used in a BTC currency based exchange. Let's say the difference on the sheet on a USD based exchange. This is the same, but in that case you don't have to feed this once you win or lose after trades, but you will have to feed this. Let's imagine that you begin to win money because your account, remember that is based in USD. So if you put here the value, automatically the pairs against Bitcoin will be calculated. So this is the main difference of these two sheets, okay? So let's work on BitMEX to do the example. So we said we have the initial account, we have fit all this information correctly. So then we will begin a trade. Let's imagine that we want to enter in a long position. So we go to the single trade BTC based sheet and we look. In that case, what do we have here? We have, this is the example that we have to take to be used for a long position against USD pair. This is the example that you have to take for a short position against USD. This is the example you have to take in a long position against a BTC pair, and this is same but in a short position. Okay, so you have here the 4 examples that you can have trading in, for example, BitMEX or even Bitfinex or any exchange. Okay. Of course, if you are trading in euros or other currencies, you will have to change dollars to euros and so on. But it's enough for the example, I think. Okay, you see that you have 2 different sheets for every kind of exchange. This is a single trade BTC based sheet. It means that you only take one trade. It means that you enter and exit, you enter a price and exit the price. You are not splitting the trade. Okay? This sheet will be used if you enter in a splitted way. Imagine that you have the same entry point, okay? You enter whatever at 10K. But then you have 4 different exit points. I treat this like different trades, okay? So it's the easy ways to calculate this. So you have a total, a summatory here, that will be used for the whole trade, okay? So for the example, we will begin with a single trade, so not to mess too much. In that case, let's imagine that we enter a long position. So what we do is to copy these 2 files, go to the BitMEX account, and paste. Okay? So we have here all the formulas to be used in that trade. First of all, the only that we have to fill is that one. This is calculated automatically because this is the summatory of this one. Okay? So first of all, in that case, is the first trade, so is the number 1.1. Today is 27.9, blah. We will enter to XBT USD, and is a long position, so it's a long position. At that moment, as we are preparing the trade, we are not in the trade yet. For us, it's a prepared trade, okay? You have prepared active when you have entered to the trade, close it when you have finished, and cancel it if you have not achieved the entry point. Okay, so at this moment is prepared. Then you have the entry point. Let's imagine that it's a long, we want to enter at, for example, 7,500. Okay, Next thing, and the most important, is the stop loss. Let's imagine that our stop loss is 7,400. Okay, and the exit point, which is important because of the reward, but not important for the calculation of the position size. Okay, so let's put the exit point to say something like this. Now, the important thing. For me, this is the most important thing of everything. Okay, as we are in BitMEX, we have a leverage cell. So let's imagine that we use a 10 per leverage. Okay, so here we put, let's say, 1%. It means that we are risking a 10% of the total account. This is too much money. Okay, so we will put 0.3. This is a 3%. Okay, so we know that with that stop loss and that entry point, risking at 3%, we will have to long, in that case, a total amount of 2.6499 bitcoins, which is almost $20,000. This is important thing. Okay, so as you can see, if you put less risk, the amount of bitcoin will be less. If you put more risk, you will have the position size will be higher, but the risk is also higher. Okay, so also one thing to know is this one. If we down the stop loss, you will see that the position size will be lower. Why? Because we will always keep the 3% risk of our account. Okay, so this is very important. At least for me, it's the difference between win and lose. Okay, so let's follow with the example. Okay, the total risk is at 3%. This is the maximum risk I would take in a trade. Okay, what does it mean? We have finished the preparation. We know where we have to entry, we know where we have to stop, and we know the exit point. We know the risk. So now we will see what is our forecasting profit. Okay, the thing that we have to fill here is the percentage of fees. In the case of BitMEX, if you enter a limit position, you are paid for entry and also for exit. So in that case, we will be paid for the trade. So the total amount of fees that they will pay if everything works perfect is $99. Okay, so this would be the brute profit of the trade, and then that will be the net profit, which is the addition of this and this. And then we will see where we have to put our target profit in the chart. It means that we will achieve a 13% target profit. Okay, then we go to the stop loss. Okay, same situation. We go to fees and we say, okay, we have the entry that we will be paid for them, and let's imagine that we are stopped, which is a market position, and then we will have to pay. So this is plus 0.5 or 0. Don't remember. Let me check 1 second. 0.75. No. 0.5. Yeah, this is. Sorry. Sorry. 7.5. Well, something is not working. It's 0.075. Okay. This is messing me. Okay, 0.075%. Okay, this is a fee. In that case, that would be the net loss. This is the brute loss and the net loss. Okay, it means that we have to put the stop loss at minus 1.33. Okay, this is all automatically calculated. Let's imagine then that we finish the trade. Everything has gone very good and whatever. Then we put here the real price loss, because it will never be exactly the same amount that you will have here. So imagine that we were forecasting that amount of money. Imagine that we finally did this. So you have the real price lost plus the leverage, of course, and then you put here if it is a winner trade or a loser trade. Then you have here the value on USD. It has not too much sense to have this column when you are working against USD pairs. But when you are working against BTC pairs, it is important to put here the real USD value, because then you can use this for your tax bill at the end. Okay, you will know every trade what was the exactly win or loss in USD. Okay, one more. We have a section to post your charts. So once you have your chart, you can put the link of the chart here, and then you have a section for the comments. When you finish a trade, just for information, remember to close the trade. Okay? And that's all. It's very simple. It's very fast to fill, and I really recommend to use this before to enter to any trade, because if you can afford to risk that 3%, you will be less stressed when you enter a trade. Imagine that you only can afford to lose a 1%. Okay, so use a 1%. It doesn't care. You will have more trades, but you will only lose $100 per trade. You will not burn your account. So this is very important. Now let's do an example of the composite trade, and let's do it in a short position to do something different. Okay, so imagine that we want to enter in a short position, split it into 4 different trades. We copy this, and then we come here, we paste. In that case, numbers are the same. First of all, what I used to do is I try to figure out all as a single position. Okay, so let's imagine that our entry point will be the same. We will enter at 10K. Our stop loss will be exactly the same for all, but the exit point will be different. In that case, 95985.8. We can put different risk here if we want. So imagine that for the last position we want to put more money to take more profit. Okay, so we can do this whatever we want. Okay, modifying this 002, 003, 005, whatever. You will achieve the total risk that you are afford to lose, and then you have the same information as before, but in a separate trade. You can also do this if you enter in different places. Imagine that in the first you enter to 10, in the second you enter to 10.050, 10.070, 10.0 and then we will modify the stop 10.50 and so on. What you can see is as nearest is the price of the entry from the stop, your position size will be bigger, keeping the same risk. Imagine that we put the same risk. Okay, so you can see as this is the nearest point from the entry to the stop, and then less and less. So this is very, for me, is a mind changing to knowing this. You have seen that this has changed automatically now. This is because that price is being modified. Okay, so I recommend you that when you prepare the trade and you say, okay, that's the trade I want to take, so you take this, copy, and do a special paste only with values. Okay, so in that way you don't have formulas, and it means that even if the price is modified, you will not you won't have this modified. Okay, and well, the same would work for Bitfinex, but in that case, if you work in USD currency based exchange, you will use that sheet. Okay, then if you want to use a BTC pair, you have to take that ones. Okay, play with the sheet, try to understand how it works, and if you have any question, you just let me know and we will try to explain it better. I hope it will be useful for you, and bye.